Have you ever wondered how companies return value to their shareholders? One important yet often overlooked metric is shareholder yield. Shareholder yield combines dividend yield, buyback yield, and debt paydown yield. This metric offers insight into a company's capital allocation decisions over time. First, let's define these components. Dividend yield measures what a company returns through dividends, relative to its market cap. Buyback yield shows the value returned through stock buybacks. Finally, debt paydown yield evaluates how much debt a company has reduced in relation to its size. Now, why does this matter? Companies that effectively manage these three aspects tend to create more shareholder value. Companies with lower debt often have higher valuations. This presents them as less risky to investors. Let's look at 3 companies with strong shareholder yields in the past year. Synchrony Financial stands out with a shareholder yield just below 11%. They achieved this via buybacks, dividends, and debt paydowns. They invested over $1 billion in buybacks, producing a yield of about 5.5%. Their dividend yield was a solid 2.1%, while debt paydowns contributed a yield of 3%. Synchrony reduced debt by $500 million, contributing to a total return of over 70%. Next, we have Tapestry, which boasts an impressive shareholder yield of 55%. This company reported a dividend yield of 2.2% and a buyback yield of over 14%. Tapestry's most significant achievement was its massive debt reduction. It retired $8.3 billion of debt, resulting in a staggering net debt paydown yield exceeding 38%. Tapestry achieved a total return of over 77% as a result. Lastly, Dell Technologies rounds out our analysis with a shareholder yield of just under 10%. Dell's dividend yield stands at 2.1%. They also executed net share repurchases totaling $3.1 billion, giving them a 5% buyback yield. Dell's debt paydown yield is about 2.2%, after paying $10.6 billion while taking on $9.3 billion of new debt. In 2024, Dell enjoyed a total return of nearly 51%. Why should we care about shareholder yield? It provides valuable insights into how companies return capital to shareholders. It reflects a company's capital allocation priorities and enhances understanding of its financial health. In summary, shareholder yield is a noteworthy metric for investors to monitor. It evaluates dividends, buybacks, and debt management to gauge shareholder value creation. Want to learn more about investing? Subscribe for more insights and turn on notifications for updates on valuable financial metrics like shareholder yield. Discover how smart investing can lead to greater returns.